All right, you bastards, welcome to the deep dive.
Future.
We're going balls deep into the world of futures. You know those financial thingamajigs that can make you a shit ton of money or leave you with your ass hanging out?
Yeah, that's one way to put it.
So futures.
Perhaps a slightly less colorful description might be more appropriate for our audience.
Can man lighten up a bit? We're all adults here, right?
Okay.
And besides, I'm just trying to keep things interesting.
Okay.
So futures, what the hell are they?
So,
Seriously, break it down for me like I'm a 5-year-old with a trust fund.
well, imagine you're a medieval baker. You need flour to bake your bread,
Right?
but the price of grain jumps around like a goddamn kangaroo on a pogo stick.
Shit, that sounds stressful.
One bad harvest and you're screwed.
I'd be hitting meat pretty hard if I were that baker.
That's where futures contracts come in.
Okay.
It's like making a deal with a grain merchant today for a set amount of flour at a specific price.
Oh.
Even though you won't actually get the flour for another 6 months.
Okay.
That way, even if the price goes to hell,
Yeah.
you're protected.
There's like a safety net for your dough,
Exactly.
both literally and figuratively.
Literally and figuratively.
Damn, those medieval folks were smarter than they look.
Indeed, they understood the importance of managing risk. So now fast forward a few centuries,
Okay.
and that same basic idea has evolved into the modern futures market.
Right.
It's not just about flour anymore.
Right.
We're talking everything from oil and gold to currencies and even stock indexes.
Hold on, stock indexes?
Yes,
You're telling me I can bet on the entire damn stock market going up or down?
you can.
That's some next-level gambling shit right there.
It can be, depending on how you approach it. But at its core, the principle remains the same.
Okay.
You're trying to predict future prices and profit from those predictions.
Okay, so let's say I want to get in on this action.
Sure,
How do they actually figure out these future prices? Is there some secret formula
there is a formula,
or a crystal ball involved?
but no crystal ball required.
Okay.
It takes into account the current price of the asset, which is called the spot price.
Right.
How much time is left until the contract expires,
Okay.
and something called the risk-free interest rate.
Risk-free interest rate. What the fuck is that?
Think of it as the return you could get on a completely safe investment,
Okay.
like a U.S. Treasury bond. It's a baseline for measuring risk in the market.
All right, so how does this magical formula actually work? Hit me with the math.
So
But keep it simple, even a drunk monkey could understand.
let's say the spot price of gold is $2,000 an ounce today,
Okay.
and you want to buy a futures contract for delivery in 3 months.
Uh-huh.
If the risk-free interest rate is 5%,
Okay.
you plug those numbers into the formula, and it'll spit out the future price for that gold contract.
So it's basically calculating how much that $2,000 would be worth in 3 months
Yes.
if I just stuffed it under my mattress.
Well, not exactly under your mattress, but in a safe and predictable investment, yes.
Right.
The formula takes into account the opportunity cost of not having that money available to invest risk-free.
Interesting. So does that mean the future price is always higher than the spot price?
Not necessarily.
Okay.
It depends on market expectations.
Uh-huh.
Sometimes the market anticipates a drop in price, in which case the future price might be lower than the spot price.
Ooh, that sounds like an opportunity to make some serious bank.
It can be.
Tell me more about how to exploit these price differences.
Well, that's where things get a bit more complicated.
Okay.
We're talking about a strategy called arbitrage,
Arbitrage. Huh.
where savvy traders try to profit from these discrepancies
Okay.
between the futures market and the regular market.
Sounds fancy. So I'm all ears. Break it down for me like I'm a Wall Street newbie with a gambling problem.
All right, let's dive into the wonderful world of arbitrage.
Hold on. Before we get too deep into that, I think we need to take a quick break to refresh our drinks
Okay,
and let our listeners process all this financial wizardry.
sounds good.
We'll be right back after a short message. Don't go anywhere, you beautiful bastards.
All right, where were we? Ah, yes, arbitrage.
Arbitrage.
The art of making money from price discrepancies.
Okay.
It's like finding a $100 bill lying on the sidewalk, except it involves a bit more financial maneuvering.
Okay, so walk me through this financial maneuvering. How does one actually arbitrage the hell out of something? Give me an example, but make it juicy. I want to feel like a goddamn Wall Street wolf.
Let's say you're looking at oil futures,
Okay.
and you notice the future price is significantly lower than it should be based on that fancy formula we talked about. That's your signal.
So oil's looking cheap in the future. Time to strike. What's the play?
You buy those oil futures contracts, locking in that sweet, sweet low price.
Okay.
At the same time, you short oil in the spot market.
Hold the phone. Shorting. Explain that shit like I'm a goldfish with a 3-second memory.
Essentially, you're borrowing oil and immediately selling it at the current higher price, betting that you can buy it back later at a lower price to cover what you borrowed. It's
Yeah.
like a reverse loan with a whole lot of potential profit.
Damn, that's some slick shit.
Yeah.
So you're buying low in the future and selling high now. Sounds like a recipe for a fat stack of cash.
It can be, but remember, there's always risk.
Right.
If the price of oil goes up instead of down, you're screwed.
Yeah, of course.
That's why risk management is key.
Right. Risk management. Don't want to end up living under a bridge with nothing but a barrel of overpriced oil.
Right.
But hey, let's not get ahead of ourselves.
Yeah.
Back to this arbitrage thing. You mentioned something about the risk-free interest rate playing a role.
Ah, yes, the risk-free rate. Remember that money you got from selling the borrowed oil? You invest that at the risk-free rate, adding another layer of profit to your arbitrage masterpiece.
Okay.
By the time your futures contract comes due,
Yeah.
you've made money on both the price difference and the interest earned.
Double whammy. I'm starting to see why they call this the art of making money. But let's get real for a second. This all sounds great in theory, but what about the real world shit?
Sure.
You know, the boring but important stuff like taxes and fees.
Excellent point. The real world can be a bitch. Transaction costs can eat into your profits, and depending on where you're trading those capital gains, taxes can take a hefty bite out of your winnings.
Damn the man. Always trying to take a piece of the pie. So what else do I need to know about navigating this futures jungle? What about those trading strategies you mentioned earlier?
Well, first off, understand that the futures market isn't some get-rich-quick scheme.
Right.
It's a complex beast, and success requires knowledge,
Sure.
skill, and a healthy dose of luck.
Yeah, luck.
Yeah.
Everyone needs a little bit of that sweet lady's kiss.
Yeah.
But what about the actual strategies? Spill the beans, wise one.
One of the most important things is understanding supply and demand. If there's a shortage of something like coffee beans after a bad harvest, you can bet your ass the future price is going to be higher than the spot price.
Makes sense. Buy low, sell high, the golden rule of trading, right?
In a nutshell, yes.
Hmm.
But it's not always that simple.
Right.
You also need to factor in things like geopolitical events,
Okay.
economic indicators, hell, even the weather can impact prices.
So it's like a giant puzzle putting all these pieces together to try and predict the future. Sounds exhausting.
It can be. Even the most experienced traders make mistakes, and the market can throw some serious curveballs. That's why risk management is crucial. Don't put all your eggs in one basket, diversify your portfolio, and always have an exit strategy.
Okay, I'm starting to feel a little overwhelmed here.
Yeah.
Maybe we should take a break and let our listeners digest all this information. Grab another drink, take a deep breath, and we'll be right back to explore the wild world of future futures. All right, you degenerates, we're back and ready to blow your minds with some next level shit. We've talked about the past and present of futures.
Right.
But now let's strap on our jetpacks and blast into the future of futures.
Fasten your seatbelts because things are about to get wild.
Okay.
We're talking about a world where robots are trading against each other at lightning speed,
Robots trading.
and blockchain is turning the financial system on its head.
Is this some Terminator shit? Am I going to have to fight a goddamn T-1000 for my oil futures?
Not quite,
Yeah.
but artificial intelligence and algorithms are already transforming the trading landscape. These things can crunch numbers and spot patterns faster than any human,
Wow.
making trades in milliseconds.
So it's like those Wall Street movies where everyone's screaming and waving their arms, but it's just a bunch of robots doing the screaming?
Pretty much, high-frequency trading is already a thing,
Right.
but AI is taking it to a whole new level.
Okay.
It's going to be interesting to see how this impacts market volatility and whether us mere mortals can even keep up.
Okay. That's kind of terrifying. But what about this blockchain thing? You mentioned it earlier. Is that just a fancy word for Bitcoin or something?
Blockchain is the technology behind Bitcoin, but it's much more than that.
Okay.
It's a decentralized, transparent, and secure way to record transactions.
So like a digital ledger that can't be fucked with.
Exactly. And it has the potential to revolutionize the futures market.
Okay.
Imagine futures contracts being traded on a blockchain, cutting out the middlemen and making the whole process more efficient and accessible.
So I could potentially trade oil futures from my phone while I'm taking a shit.
Theoretically, yes. But remember, just because something is easy to access doesn't mean it's easy to
I
understand.
don't want to end up flushing my entire life savings down the toilet because I thought I was a goddamn blockchain whiz kid.
Right.
So what's the bottom line here? Should we all be running out to buy Bitcoin and start trading futures on our smartwatches?
Hold your horses. Futures are powerful tools, but they're not for everyone.
Okay.
It takes knowledge, skill, and a willingness to take risks.
Yeah, and a strong stomach for the inevitable roller coaster ride that comes with trading. But let's be real, all this futuristic tech is bound to change the game. What kind of impact do you think it'll have on the average person?
I think the biggest takeaway is that financial literacy is going to become even more important. As technology makes it easier to access complex financial instruments, people need to understand the risks involved
Right.
and how to make informed decisions.
So don't just blindly follow the hype.
Yeah.
Do your research and maybe consult a financial advisor before you bet your house on pork belly futures.
Exactly. Stay informed, stay curious,
Yeah.
and maybe, just maybe, you'll come out ahead in this crazy world of finance.
And on that note, we're wrapping up this deep dive into the wild world of futures. We hope you learned a thing or two, had a few laughs, and maybe even got inspired to explore the financial markets yourself.
Just remember, don't be a dumbass.
Hmm.
Do your homework, manage your risk, and never invest more than you can afford to lose.
Word. And always remember, the future is uncertain, but it's definitely going to be one hell of a ride. Thanks for tuning in, you magnificent bastards.